everyone, this is your friend and host Hari Nakai. I welcome you all to Honeywalia shows. We are really thankful that you are giving so much interest in our shows. You send us so many queries. Today on our show we have Mr. Ushpreet Singh from RBC, top mortgage specialist in Canada. So we have some questions which are there, and we would like to discuss the same with Ushpreet, because these questions are specially asked by the people, the customers who have a lot of inquiries that you are posting on our show. So Ushpreet, before we start, I welcome you on our show, Ushpreet. Before we start, I would like to know a few things which are the queries of our customers. What is the process of ownership when they are buying a house, first of all? Because this is a very important question. What is the role of a mortgage specialist, and what is the process when a customer is buying a new home?
Thank you, Harry, for inviting me today. It's a great question that comes up all the time to us, that when do we involve a mortgage specialist in our home ownership process? I would always recommend that home ownership, if you're out there looking in the market, the first thing you should do is always get a pre-approval from a mortgage specialist. So you need to reach out to one of us. If best case scenario, you reach out to us and we tell you that this is how much you can get approved for, this is the documents you need. And we just set a vision for you, a project, like a whole process for you we set, where we tell you that this is how you can have a home ownership. Mm-hmm. So it starts with a pre-approval. The next step we go recommend you to a realtor, or you can use your own realtor or a builder of your choice. After the builder and the realtors show you the houses, everything is done, you have to put an offer in place. You need to have a firm offer in place. And once the offer comes back to us, we prepare your file, we send it for a final approval. Once the final approval is done, then you're set, you're good to go. You can remove your home ownership, home financing conditions, and you can go from there. And the last step is the closing, where a lawyer gets involved, mm-hmm. and they ask you for all the registration documents, and they register the mortgage under your name.
So when we talk about pre-approval, everybody has a different way of working. Like I don't know about you, but that's what our customers and viewers want to know. Like, how do you work on those grounds? But I have seen some mortgage specialists, when they talks about pre-approval and final approval are two different things, right? So sometimes is the pre-approval accurate when we talk about, like, say somebody is buying a house for 500,000 and he's going for a pre-approval. So once the pre-approval is done, he has not put an offer on the house. So when it comes to the final approval, does that make a difference at that time, or like pre-approval is like that he will be qualifying for that?
When you deal with RBC and me personally, I always ask for documents up front. So we verify your income documents, we verify your down payment, we verify everything up front, and then most cases, as a mortgage specialist, we kind of know if the approval is gonna go through or not. Yeah. So I just look at the documents first, and then if needed, we start an application and we do a pre-approval, where after the pre-approval is done, we provide a RBC approved letter. Okay. So it's not something that I write down on a piece of paper. It's an RBC approved letter which says that this is how much you can get approved for. And now, of course, when there is less than 20% down, we have to send the file to us insurer. Yeah. And when we send the file to insurer, then it's subject to adjudication again. But in most case scenarios, we do a pre-approval, we start an application, we check everything, we verify everything up front, and then you are set to go, and you have a better understanding of how much you can get approved for.
So is there a way, like, because most of the mortgage specialists which I talk to them, they said that it totally depends on how you are presenting your mortgage. Mm-hmm. So once you put a paperwork or you present the mortgage to CMHC or your bank, does that also plays a different role in every case to case?
Yes, 100%. At the end of the day, we have to have a story. We need to tell the bank a full background of what the purpose of the property is, how the income is verified, how everything is verified. So we just have to create a whole notes, which in some other cases we also say a story, and then that we present to the bank, and we tell them that this is the whole story behind what the person wants to do, and we cover all the 5 C's, which is of the mortgage and an applicant.
Absolutely. So one of our viewer, he asked a very valid question. Nowadays, because of the COVID, the interest rate is going down. So few months back, he bought the mortgage at the rate of, I think, 2.6, and somebody has bought at the 3% interest rate. Yeah. Now the interest has gone down to maybe 1.9, I think. Yeah. That's something each bank is offering. Yeah. So when we talk about the interest rates going down, can they reapply for the mortgage?
Yes. So all refinances, or if you want to switch your mortgage from one bank to the other, no matter what it is, we have to, unless you stay with the same bank, and if you want to switch to a different bank, you can definitely do that. It's subject to reapproval again, so we need to send the documents again. But it's a great question. It's a great time to have a mortgage right now. The interest rates are at one of the lowest times. It's really low. You can save a lot of money. But when someone comes to us, first question we ask them is which bank they deal with currently. And second question we ask them is how much penalty will they be paying if they break their mortgage and switch to RBC or through one of us.
So when we talk about the penalty, definitely most of the people nowadays, they go for a 5-year fixed rate. So once they are going, breaking the mortgage, how much is the interest, penalty? Like it can be, so I've heard that 3 months interest or something like that. How does that work?
So it depends on a case-by-case basis. Some cases we have seen penalty being really low. Some cases we have seen penalty being really high. But when you reach out to one of us, I always check how much the prepayment penalty is, or I ask the client to go to their bank, ask the prepayment penalty, and then tell us. And then we do the calculation, and we see the difference if they're gonna be saving in over 5-year term, let's say, how much money they will be saving. But one good point about refinancing or switching your mortgage over to a different bank or RBC is that you're locking in your rate from 2020 to, let's say for 5-year term, you're locking in for 2025. So you have an additional year or 2 years where your rate's gonna be the lowest at
that time. Yeah, absolutely. And this is my personal question as well, because some people have variable mortgage. So when we talk about variable mortgage, it's not fixed, right? So can you change from the variable mortgage to the fixed mortgage anytime?
Yes. So if you have a variable mortgage right now, it's a much more flexible product. It's a much more flexible mortgage term where you can switch to where you can break it. Penalty is usually lower compared to a fixed mortgage. If you're with the same bank, you can still convert. Most banks, most lenders, they offer that you can switch from a variable to a fixed with no penalty, most cases, given that you go with the same existing term, like remaining term, or the higher term.
So what does that mean actually?
So let's say someone got a variable mortgage 2 years ago.
Yeah.
They're on a 5-year variable term. They still have 3 years left on their variable term. They can go to their bank and they can either go with a 3-year, a 4-year, or a 5-year term. Which means they are going past their existing term remaining.
So what is the difference in open variable mortgage?
Open variable mortgage is not a famous mortgage. It's usually for someone who wants to just buy a property and sell it. There's always open term and a closed term. In an open term, it's usually just that you can break your mortgage with no penalty, but the interest rate is, of course, much higher.
And some people, like I have seen, like some people have a lot of debts and they want to consolidate their debts. So how does that, when it comes to you, somebody comes to you and he says like, I have a lot of debts and I want to buy a mortgage. So how do you help them at that time?
So if anybody has a debt, any viewer watching the show who has any type of debts, which be it credit card, line of credit, car loans, and they have equity in the house, we can refinance their property. And give them some extra cash out of the property where they can use that to pay off their debts. Now, if someone is a first-time home buyer and they have a lot of debts, then we of course have to see their income and we have to see their debt. So we always see income to debt ratios.
So when we talk about debt, there are two terms which comes in picture. One is debt consolidation and the other is home equity line of credit. So when you are talking about home equity and paying off their debt is a different thing, or debt consolidation is a different thing altogether?
So debt consolidation is basically, so we can refinance the house. When we refinance the house, we can take some equity out of the house. That equity can also be in a line of credit. That line of credit interest rate is much lower than a regular line of credit interest rate. It's in most cases it's prime plus 0.5. In some cases we have seen prime plus 0. So it's different type of rates on a home equity line of credit. Now, when we refinance a property, we have the option to either include all of the debt that we're paying off into a mortgage, or if you don't have any debt, you can have a line of credit on the house for any future emergency.
So when we talk about debt consolidation, is it a loan?
It's included in the mortgage. So when someone comes in and they have some debts, it's basically we're refinancing their house and we're giving them a mortgage or a line of credit on the house to pay off their debts.
Okay, and now we come to the builder mortgage, because these are another questions which are very very important questions nowadays. People are like buying the property because of the interest rates are going down. When we talk about draw mortgage, there are two type of mortgages which I have heard about. One is draw mortgage and one is completion mortgage. Can you give a little bit light on what is a draw mortgage first?
Yeah, so anybody, it's a great question. Anybody who's building a house or is buying through a builder usually has to go through what we call a builder mortgage. Now, when we go to the builder mortgage, there's two types of builder mortgages. One is a completion mortgage and one is a draw mortgage. In a completion mortgage, we basically let the builder finish the house, and at the end of it, we just release the funds to them. Now, for example, someone came to us for a mortgage, and they bought a house for 500,000. And they're putting, let's say, 20% down, 100,000 down, and your mortgage is for 400,000. There's two options we can release the funds. If it's a completion mortgage, in simple terms, there's a lot more things that we look into it. But in a simple term, if it's a completion mortgage, we just release the 400,000 by the end of it when you get possession as a client. Or a second option in a draw mortgage is that 400,000 is divided based on the construction stage completed. So if a builder's completed, let's say 35% of their construction out of the 100, we release the funds based on that. Then let's say they do another one at 50 or 75 and 100. So they can have a different bank can release funds in 4 or 5 installments, not just one, which is great for a lot of home buyers, because if you're dealing with me or RBC, we basically, that interest rate gets locked in on the first draw it's done. So let's say your builder has a house he's building for you, and you just he's at the construction stage where he's done, let's say, backfill or something like framing, and builder asks the bank for the draw or the funds based on that construction stage completed. Your interest rate gets locked in right there and right then, which is a great given the interest rates that's going on right now.
So do you think that the builders do prefer a draw mortgage or completion mortgage?
Depends case by case. Some builders really love draw mortgages, also because it's basically bank is releasing them the funds
early.
Only thing is that builder has to pay, or the client has to pay the interest while the draw is being done. In some cases, builder love the draw mortgages, and in some cases, builders mostly like completion mortgage because they already have the funds available. They want to build their house and just get the money one time.
So I think when is the first draw mortgage released? I think there should be some stage at work when it is released.
Depending, it's a case by case basis. We can also release if it's more than 20% down. We can also have first draw on the lot. So we can give you the first draw when the lot is being transferred to your name. In most cases, builders prefer when the house is in infill stage. Backfill stage, or when it's at the framing stage.
Okay, so friends, these questions are the questions which are important when you are buying a property, and I can understand there are so many questions which is in your mind which you want to discuss with us, and Ushpreet is always there. He is one of the top mortgage specialists in Canada, so please give a call to Ushpreet. His number is mentioned below, and you can have a lot of satisfaction when you talk to Ushpreet about these questions, because Ushpreet has a lot of experience in mortgages. Ushpreet, there are so many people who come for approval and pre-approval. Is there a particular recommendation you will give to them, like before they come to you, what kind of homework they should do, so that when they come to you and they say, oh, okay, Ushpreet, we are coming to for applying for the mortgage, any particular message you want to give to them that, okay, you should be well prepared before you come to me?
That's a great question, Harry. When we see or talk to a client, the first thing we always ask for the documents. So one recommendation that I would request all the clients or anyone out there looking for a house is that always gather your documents before meeting a mortgage specialist. Always have your documents up front, be it your T1 general, your notice of assessment, your pay stub, your letter of employment, your bank account statements, because the faster you give the documents, the faster your mortgage approval is. A lot of times the delay in process is when there's missing documents. When we ask for a series of documents, 4 documents out of the 5 are only provided and 1 is missing. Because every time we need to revisit the file, we find out that there's 1 paper missing or 1 document missing and there's some other thing missing. So always, my recommendation to all clients is that when you're going out or when you're looking into getting a house, always have your minimum at least your pay stubs, your T1 general from last 2 years, and your notice of assessments. Because the faster you provide them to your mortgage specialist, the easier the process gets.
So I think you should have a checklist for the customers, and you can provide them in advance so that this is the checklist before you come to meet me, so they should give you a checklist for that, right?
Yes. So one thing I do always with my clients is I always email them, depending on how they like it to be. I always email them that this is what I need. I also send them a sample of how the paper looks like, so that it's easier for them to find that document. Because when you're a first-time home buyer, a lot of times what we see is that a lot of people still don't know what a T1 general is. A lot of people still don't know what the NOA is or a child tax benefit notice is. So it's always better if a sample is provided to them that this is how it looks like, and then I'm always there to help you. It's not that I just give you the checklist and then leave you alone. I can always guide you how to find it, where to find it. You can find it through your accountants. You can find it through CRA's website. It's a very simple process, given you are prepared to provide all the documents.
So friends, it depends each case to case. Each case is different. So definitely these are the documents which are required before they start before the mortgage specialist starts the process. So please get those documents ready. Definitely there will be more documents required. So before filing the documentation to the bank, the mortgage specialist can let you know that you have to get more documents, so that he is well equipped with that, and then further he can process your application. Friends, as we are talking to Ushpreet today, Ushpreet has given us a lot of answers about the questions, the queries you have asked for. So there is another question, Ushpreet, about the minimum down payment required. When we talk about the minimum down payment, is 5% is the minimum down payment, or how the down payment works actually?
So when we apply for a mortgage, the government policy is that you need to have at least 5% of your 5% down payment has to come from your own resources. It can be through your own resources. It can be gifted. A few insurers also allow us to have a borrowed down payment, where we can borrow it from a line of credit or a RRSP loan. So there are options, but the minimum down payment has to be 5%.
That should be in the saving?
And does not have to be the savings. So it can be gifted, it can be savings, it can be borrowed as well. Two insurers allow us to have borrowed down payment.
So when we talk about gifted funds, you discussed about some gifted funds. So what are gifted funds actually, and who can give the gifted funds?
So gifted funds it's a great question. Gifted funds can be funds which are gifted, not borrowed from family. So it can be anyone which is immediate to you. So let's say you're applying and your dad or your mom or your brother or your sister is giving you down payment as a gift. We just verify as a gift letter, we get them to sign it. And as an applicant, you sign it as a recipient and they sign it as a donor. And then we just verify that the funds are coming to you as a gift.
Okay, so we'll come back to the 5% and like the down payment. So when we talk about 5%, there's another criteria which is 20%, where CMHC doesn't play a role. So how does that work, 5% and 20% down payment?
It's a great question. Again, 5%, and the major difference between anything less than 20% and more than 20%, the biggest thing is the insurers. So if you're putting less than 20% of your own resources, you have to go through our insurers, which is technically CMHC, Genworth, and Canada Guarantee. If you're doing more than 20%, then you're only subject to approval from the bank. The biggest difference which comes as a consumer perspective is between 5% and or less than 20% and more than 20% is that when you're putting less than 20%, you go through the insurers. There is a CMHC or mortgage insurer premium that we call that is charged to you and is added to your mortgage. So in some cases, it's 4%, 3%, something around there, depending on how much you put down payment. And if you do more than 20%, then you completely just avoid this premium or the fees that we call. Another great advantage of having more than 20% down is that you can amortize your mortgage over 30 years. Which helps you have a much lower payment compared to if you were to put less than 20% down or have a 25-year mortgage. Because when you put less than 20% down, your maximum amortization has to be 25 years. When you do more than 20% down, then your maximum amortization can be up to 30 years. It's your personal choice. If you want to do 5-year, 10-year, 15-year, 20-year, it's at the end of the day what the client wants, but you have that option when you put more than 20% down.
So from your answer as well, we have another question which comes up is CMHC. CMHC has changed some regulations recently. So regulations are little tricky, which people are not aware of right now. So can you give some information about that as well? Because I think there is something like you have to get a score of around 680 or something like that. So how does that work?
So if you're applying through CMHC, so there's 3 insurers. Only one has changed as of now. The other 2 are still the same. They're still business as usual. But if you're putting less than 20% down and we send you a file through CMHC, there's 3 changes which they've made. Number 1 is that your minimum credit score. So one applicant has to have a score of more than 680. So let's say there's 3 people on the mortgage application. One person needs to have at least more than 680 beacon score, credit score. Second thing they've changed is that they are not allowing borrowed down payment.
Yeah.
Only CMHC is doing that. And number 3 that they've changed is that your TDS and GDS, so your income to debt ratio, they have reduced it. So if you were to qualify for a higher property mortgage value, now it's a little bit less, but we still have the other 2 insurers which have the same criteria that they had before the changes. Another good big change we have coming up is the posted rate that might go down.
So friends, this is the right time to buy a property, and because the interest rates are pretty low, I don't think it's going to go lower than this because it's already been down. So Ushpreet, before we end up the session and wind up everything, any message you want to give to our viewers?
My message to viewers is that you can always reach out to us. We're always there for you. At the end of the day, this is our job. This is what we do for a living. And if you're out in the market, now is the great time to buy. Interest rates are one of the historically lowest they've been. Out there, there's great offers going on. There's great cash offers going on a mortgage. There's a lot of things which is happening right now. So now is a great time if you're looking to refinance, if you're looking to purchase a new home, or if you're looking to buy investment property. You can call me anytime, or you can text me, you can email me. I'm always there for you, and you'll have a more professional and ethical advice from me.
And friends, we'll have Ushpreet back again soon, and he will be able to give you the answers which you have questions for him. So please subscribe our channel, like our YouTube page, send us your questions so that we can talk about the same questions to our mortgage specialist. He's been incredibly doing very good in the market. So thank you, Ushpreet, for coming to our show.
Thank you.